Good afternoon, TaxBots. I'm Justin Spicer, and I'm here with Kathy Hoover and Luke Mienick, two attorneys with our Low Income Taxpayer Clinic. Today, we're going to be talking about tracking mileage and mileage tax deduction for folks who drive for rideshare and delivery services like Uber, Lyft, and DoorDash. Feel free to leave a comment or a question, and we will answer whatever we can. In today's topic, we're going to be talking about business mileage, but first we need to know the difference between personal mileage and business mileage. Kathy, can you explain the difference to us?
Sure. So personal mileage is any mileage that is unrelated to the business. For example, if you're driving around town and then you decide to drive for Uber when you get downtown, the miles you drove to get downtown would not count. That would count as personal mileage. A handy tip to remember is if the Uber, Lyft, or DoorDash or whatever you have app is off, then it's personal mileage. Business mileage, on the other hand, is any mileage that you drive from one place of work to another. Using the situation above, if you pick up a passenger downtown and drive the person to the airport, the mileage between the pickup location and the drop-off location would be your business mileage. But once you log off the app and become unavailable, your mileage reverts to personal mileage. So your drive home would not count as business mileage. That would be considered commuting mileage. Commuting mileage is just a technical term of when you drive back and forth to your job.
So, Luke, why does it matter if my mileage is personal or business?
So only your business miles can be used for a tax deduction. So it's really important to keep track and good records of which miles are personal and which miles are business.
Kathy, does the IRS say you have to track your mileage in a certain way?
No, there's no requirement on how you track your mileage as long as you show how you arrived at your calculation. The IRS does prefer that you track every single mile you drive every single day using a mileage logbook or a business diary, and then figure out which of those business miles are business or personal. But really, this would be impossible, right? This is really probably the hardest way to track your mileage because it requires a lot of detailed record keeping. But you can also use something that we call the sampling method. This is when you keep track of your business mileage for a sample portion of the year and then use that sample period to estimate your mileage for the whole year. As an example, if you drove 1,000 business miles in the first 3 months of the year and you expect to drive about the same amount throughout the rest of the year, you can multiply that number by 4 since there's 4 3-month quarters in each calendar year. In this situation, that would be $4,000 or 4,000 miles. Some people prefer to use mileage tracking software or phone apps to record their mileage. There are many apps out there. Some are free, some are for a fee. Just do an internet search and find one that fits your needs. Again, you can use whichever system you want as long as you show how you calculated that number and use it consistently.
Luke, let's say I've figured out which of my miles are business miles. What do I do next to deduct that mileage?
So after you add up how many business miles you've driven, the IRS lets you use one of two ways to deduct the business use of your vehicle. You can either deduct what we call the standard mileage rate or your actual expenses.
Kathy, Luke just mentioned the standard mileage rate. Can you explain how that works?
Yeah, so each year the IRS lets you use a standard amount for each business mile you drive. For 2024, the allowance is 67 cents per mile. So you would get 67 cents for each business mile that you drove. That amount generally changes slightly each year, so make sure you're using the correct rate. To show everyone how this works, let's say you drove that 4,000 business miles in 2024, like we calculated a moment ago. If you decide to use the standard amount, you'd apply the total miles, in this case, the 4,000, by the mileage amount of 67 cents. In this case, you can claim a tax deduction of $2,680 for the year. For Uber, Lyft, and DoorDashers who rack up a lot of business miles in a tax year, the standard mileage rate is generally your better option.
Luke, you also mentioned that you can use your actual expenses. Can you explain to us how that works?
Sure, so under the actual expense method, you can claim any car expense. This includes gas, oil, insurance, repairs, and so on. If you lease your car, you can also deduct your lease payment. Claiming actual expenses normally works better for freelancers who do a light or medium amount of driving for work. You also still need to keep track of your personal and business miles if you use the actual expense method. That way you can figure out what percentage of driving you did for work. As an example, if you use the car 40% of the time for business miles and 60% of the time for personal miles, you'd only be able to deduct 40% of your actual expenses. To figure out what percentage of car expenses you can deduct, you'd add up all of your personal and business miles and use that percentage. For example, if you drove a total of 10,000 miles in 2024 and 5,000 was business and 5,000 was personal, your percentage would be 50-50.
Kathy, let's say I drove a lot of miles in 2024, but I also had a lot of expenses. Can I use both deductions?
No, so you can only use one of the two methods to calculate your deduction. You can't use both in a calendar year. However, if you own your car, you can switch between the different methods after the first year. But in the first year, you have to use the standard mileage rate to be able to switch. If you take actual expenses in the first year, you are stuck with that as long as you use that car. If you lease your car, you can take the standard mileage deduction, and you have to use that for the entire lease period. You cannot switch between years.
So Luke, once I've made my calculations and I figure out which deduction method I'm going to use, what do I do next?
So you will record your deduction on your Schedule C along with your other business expenses. You will need this information to calculate your net profits or loss for your business. We'll talk more about the Schedule C in a later video.
Okay, great. So if I have more questions, Kathy, where can I get more information?
So the IRS has two publications that can be useful. To find those, go to irs.gov, that's irs.gov, and search for publication 463, and it's titled Travel, Entertainment, Gift, and Car Expenses. You can also search for publication 535, that's 535, Business Expenses. Those could both be very helpful in these situations.
Okay, great. Awesome. Thank you, Kathy, and thank you, Luke, for the awesome information. And thanks to everyone for joining us today. Um, Tune in next time on October 25th when we'll talk about tax debts. And remember, you can find this segment on our Facebook page and past tax chat videos on our YouTube page. Thanks very much, and we'll see you next time.